What is up, all you real estate loving individuals? This is episode number 32 of the Real Estate Take Podcast, and I'm your host, Wendell Butler. This is your go-to podcast with tons of information regarding the current real estate market, where we get various real estate professionals' current take on different areas of real estate. For today's guest, we have Justin Freishtat. Justin spent the first decade of his professional career building Heartland Foods, which was acquired by a private equity firm in early 2022 after the company had generated $87 million in gross revenue. Now, Justin raises capital and manages investor relations as the capital advisory chair for SafeSpace Global, managing partner of Kerns Capital and fund manager at Pitch Equity. Justin also helps individuals and their businesses start and build their brands on social media, monetize, and drive revenue as Vice President of Sales at Kerns Marketing. As an investor and fund manager, Justin has diversified his portfolio with positions in multifamily and single-family projects, early and late-stage pre-IPO private equity. So let's welcome in Justin. Justin, how you doing today?
Doing fantastic. It's good to be here. I'm excited to dive into real estate and wherever else we take this thing.
Heck yeah. I mean, we talk about real estate here, but we also talk about all types of business and investing because real estate's great. I think it's one of the best base foundations to build wealth with and invest with. But as the market changes and stuff, it's very interesting to see other aspects of investing and other opportunities to make, passive income or just be creative with businesses. So I'm excited to have you on because you've done so much. And I'm glad you reached out to me. I saw you on Sean Kelly's podcast, who I'm acquaintances with. When I lived in Miami, he would come and visit a couple friends of mine all the time. So it's cool to see his podcast do well. And then I saw you on it and then you reached out and I'm like, oh, hey, you look familiar.
That's the idea. Omnipresence.
Yeah, right. Cool. So I just like to get started by just you introducing yourself, talking about yourself broadly, kind of what you do now, what you do in real estate, what you do outside of real estate, and just what's your backstory. So you can start there.
Yeah, it's been an interesting ride. I mean, the first decade of my career, I had nothing to do professionally with finance, real estate, private equity, any of the stuff that I do now. I was building a service business, a direct sales business, and started with knocking doors, dropping out of college, just doing the sales side of the game. And then eventually start building teams and you learn higher level skills, managing and building a business to sell it. And that's eventually what we ended up doing. But the whole time I was building that company, I was really focused on education in terms of, well, when you do build a business and sell it, but a lot of people end up doing that, almost all of them end up losing it all because keeping money and multiplying it is completely different. It's the opposite skill set of all the risk you took on the way to build a business. So I wanted to learn, what do you do when you get money? And then what are all these ways that people make so much money once they have it? So I kind of did the reverse education. And I was dreaming the whole time of getting into the space that I'm in now when I was ready. So when we had the exit, sold the business, I just kind of hit the ground running in terms of networking and getting into the highest level rooms I could to get around people that were doing all these crazy things, raising billions of dollars, doing massive projects. And through that process, that's how I've met all of my partners. Building the brand on social media was instrumental because now you're starting to get recruited into these opportunities. And I can just tell you that building a personal brand will be the best investment you ever make in terms of access and networking with the highest level people in the world.
No, yeah, for sure. And I think people miss out a lot on just focusing on building like your own personal brand. Sometimes they only focus on company brand or like their team's brand and stuff like that, which is important as well. But your own personal brand is one of the most things because it's you, and you could sell a company and all of a sudden that brand's gone. You're not connected with it anymore as much as you were. But if you build yourself personally, you can always keep growing, getting opportunities, network and stuff. People know you for you, not just for you for building like a certain company, which it took me a little bit to figure that out too. And I have a couple of friends that were in e-commerce as well that speak about that too, because all they focused on was their brand, whatever the business was. And then they realized, wait, like we sold this company. Now we're back to square one, So yeah, it's super important. And networking too is, can't get enough of it. I mean, that's the best way to grow. You do a lot of stuff alone fast, but I mean, you grow a lot faster. Well, not faster, but you grow larger and can do a lot more together. So networking, finding the right people to work with is important. So like when you built, was it Heartland Foods and then you sold that, like, did you have any like idea of what it would take, or you kind of just taking it as much as you could as a sponge and trying to figure out the next step of what you wanted to get into or invest into? Talk about that a little little bit and kind of where your mindset was there.
Yeah, I had started taking profits from the company and investing into private placement deals to learn the space, before we exited the company. So, I had a good amount of experience deploying capital into other people's deals, looking at it from that limited partner side. And the whole time it was just, I cannot wait until I can go onto the general partner side and actually be the one putting these deals together and raising the capital. And it's just so much fun. It's a much higher level thing. I mean, to go from people's kitchens selling a $2,000 to let's say $8,000 ticket for a decade, and then recruiting and training other people how to do that, and then eventually exiting, it's a much higher level conversation when you're talking to accredited investors, family offices, institutions, people that deploy 100,000 on the accredited level or more, up to institutions that don't write checks for less than 20 million, some even bigger. It's just everything in life is going to be really hard. So I think you just need to choose excitement in the hard, and where the possibilities are endless. So if you're ripping door-to-door sales, I mean, that maxes out at, I've heard of people making $1 million a year doing that. It's few and far between, but it's a grind that gets old quick. And the space that I'm playing in now is just the excitement that comes with it, the high level conversations, the day-to-day is just so much more exciting. And I think that's really what I wanted out of life was, yes, we want to make a lot of money. Yes, we want to provide and do all this stuff, but like, how do you feel about your day-to-day? And I couldn't feel any better about what I get to do on a day-to-day basis.
Yeah. I mean, it's important. Like everybody talks about that grind or the hustle mindset, which is like you said there, like door-to-door salesman. You can hustle and grind and make a good amount of money, but you're going to burn yourself out. Most people, I mean, some people are wired to just do that insanely, which I don't know how they do it, but most people burn out because it takes a lot of effort, and then you kind of get capped out to a point that you can't really, grow much more unless you start building teams and essentially build a business within whatever you're doing. And at that point, you become higher level decision making, like you were saying with Heartland Foods. And that's where it could either get really fun for some people, or maybe some people don't want to do that and they just want to stay grinding. But yeah, to really expand and give you time, get your like freedom back and stuff, you kind of got to think bigger picture. And I want to dive a little bit into SafeSpace Global. That's what it's called, right? So yeah. You basically work with investors to raise capital do you invest in certain niche markets with their money, or like what do you do as a adversary of raising their capital and trying to invest with them?
So with SafeSpace in particular, we're already a publicly traded company on the over-the-counter pink sheet market. So the stock ticker is SSGC. Company has no debt. Founders funded everything the whole way since 2016. The only reason why we did a $10 million round is because we want to uplist onto the New York Stock Exchange. And one of the boxes you have to check is a certain amount of capital on your balance sheet that covers your burn rate for a few years. So That was the only reason why we did the raise. And we got it done in less than a month. And the story is incredible. We're an AI SaaS company, which publicly traded companies, that niche commands the highest multiple in the market right now. So it's the right product. It's got a great mission. It helps saves people's lives in all these different verticals. So for me, the opportunity to get onto the board of a publicly traded company and help fund the mission, this gets back to the leverage, right? And then take compensation as stock. Our stock has run from, I believe it was about 20 cents when I joined the company in January, and we've been as high as $1.59. This morning, we were trading between $1.05, $1.07. So if you're getting tons of shares at a certain price, you believe in the company, your hard work exponentially pays you. Like my stock on paper is more in the last 6 months than I've ever made in a year. So I think that's a graduation of leverage to you learn how to work really hard in the beginning. I don't think there's any way around that. That kind of qualifies you to then take angles and shots to work smarter and really get massive returns for your time. So that's the cool thing about the public side. I mean, that's the only way you could ever make 10, 20, 30, 40, $50 million in a couple year period is in the public markets behind stock or building a massive private company that you sell to private equity. So that's the public side. And then pitch equity is where we do private equity and real estate. So that's where we raise capital. We have a couple different structures. One of them is a blind pool. Have you ever heard of a blind pool fund?
I've heard it mentioned, but I don't know too much about it if you want to dive into that.
Yeah, I think for raising capital, this is one of the hardest funds to raise capital for because blind pool means you're going to give me your money and you don't even know what you're investing in. So it's like, and you're basically investing in the track record of the general partners to execute on the strategy. strategies. So what it does for the fund, when we raise the capital ahead of time, we underwrite hundreds and hundreds of deals. And then when we find the best deals in the marketplace, obviously have the highest competition. So when we raise that capital up front and we can move quickly, we can close faster than everybody else, we're able to capitalize on the best deals in the market. So that's what a blind pool is. And we pay it out in a debt structure. So those investors are going to get a 1% payment every month, 12% a year, regardless of how we're allocating that capital. It's fixed. And then it's a 5-year note. At the end of 5 years, we redeem the principal back plus a 24% kicker. So you're getting a 16% IRR on a fixed product, which that's not something you're really going to see very often in the market.
Yeah, I like that blind pool funding because you can basically raise the capital before, and then once you find like a deal that is going to work for like the math and everything behind for the investors to give them returns and everything, you can quickly just make aggressive offers and close quick on it rather than getting the deal under contract and then go try to like stress and raise money after the fact, right? Is that kind of like the benefit of it?
Yeah, exactly. So, and when we do your traditional equity deals as well, we just closed on The Bend, which is a $4.5 billion project in Chattanooga. We bought 20% of the project for $3 million. So at a $26 million valuation, the CBRE appraisal came in at $131 million. So bought that deal at 80% off. That's as good as it gets, but it is a different situation. You get that deal under contract, you have a certain amount of time to raise the capital and close. It's much more stressful than when you're pumping capital into the blind pool and you have the discretion to wait, and the capital stack is not an issue in terms of getting the deal done.
Yeah, no, that's really cool. Yeah, I've heard of that phrase before, and I've like seen people do it that way. I just didn't really tie the two together, that's the best way to do it. But again, you have to have like a very nice track record. They have to trust you as the investors, and you have to have proven yourself before you try to do that. Because if you just come in hot without any track record and you're just like, hey, give me like a couple $1 million and I'm going to make this work, I guarantee you're going to get no's left and right.
Yeah, 100%. That's
probably like lose my number. What is wrong with you?
Yeah, and that's why for me, I'm still pretty new in the fund world. I've only been doing this for coming up on 4 years now. So I've always had partners in everything that I've done. I really believe in that. I know a lot of people who do really well without partners, but there's no way I would be able to do a $4.5 billion deal without access to it and somebody with a track record, right? So my partner, Scott Boroff, he did $1 billion on Wall Street as an investment banker before even going into the private side. He's got over 20 exits to his name, gone public on Wall Street a few times. I mean, this guy is a killer with 30 years of experience. So it's much smarter for someone like me to partner up with him, bring my skill set to add value, and then I get a seat at a much bigger table than I would be able to do on my own.
Yeah, that's the same with like every business, really. It's like, especially in real estate, like if you're trying to do like a new build construction or build like an apartment complex, you can't just go to the bank with money and be like, hey, I want to do this. They're going to say, have you done this before? And not give you the money because you haven't done it before. But if you just bring on partners and just give them a little slice of the pie to at least make the deal work because they have a track record and they can fill your weaknesses with their strengths, that's how you get stuff done. And it's just having an abundance mindset, understanding that going in on a project like together with people that each have different strengths and the ability to get it done, even if they give away some profit, like it's worth it because it's going to get done, rather than trying to nickel and dime your way through the project where you might not have the track record and it's going to take longer. It's going to be a bigger pain in the butt. And by that time, you might not even end up being able to do the deal. So it's important to have that mindset in pretty much every type of business, especially, fund management and stuff like that too. So you have basically the private equity firm. That's what you focus with, like real estate purchasing, right? And you focus mainly on what type of projects does a private equity firm focus on mostly?
So we have a customizable fund, which means it's a private equity real estate fund. So we can still get all the exemptions that come with a real estate fund as long as 80% of the fund owns real estate assets. The other 20%, we can buy cash flowing businesses, improve those, service the debt for our debt fund while we do development projects or whatever. So it's a nice blended approach to making these different mechanisms work. That's what's so cool about it. But we don't asset discriminate. Scott does all of our underwriting, looks at all of the deals. We're raising right now for a deal called Lions View Estates. It's the last 4.5 acres on the water in Knoxville, Tennessee, right next to the Cherokee Country Club, 5-year wait list. We acquired the land at half of the appraisal, right? And you know this, I mean, the money's made when you buy, right?
Yep.
So that's a great deal. It's a small raise. We're going to build 4 luxury homes on those lots there, and it'll be an 18 to 24 month project. And we can conservatively say the LPs will get a net 25 to 35% on that deal.
That's good. That's really good. Yeah, like the cool thing about like those type of projects is like someone might look at that does like like single family, just spec home builds and be like, that's like too big of a project for me. But it's essentially the same exact things, the same exact process. But the only difference is you have to have the money to initially purchase the land, which is probably a lot compared to like doing a single family spec home. So I think that's the benefit of doing fundraisers, getting into private equity, raising and stuff like that, is because it just gives you more money to play with more commas, which is essentially the same time and energy to each deal as like the smaller deals, but it's just larger returns for everybody. Before you got into doing these bigger deals, did you ever do like smaller deals just yourself personally? And can you relate to that, being like it's pretty much the same thing, it's just more commas?
Yeah, no doubt. I mean, I started with a condo first and then a townhouse, right? And my strategy was very simple. I am not an operator. I don't want to do value add. I don't want to do any of that stuff. So I would just buy something, live in it for a year to get the owner interest rate and move out of it and buy another one. And like I stuck to my game, my sales game, the Heartland Foods era. And then I was just taking all the profits and just buy another house, right? And that worked for a while. And then I saw the multifamily value add game and I'm like, wait a minute, we can buy C class or B class, 50 to 300 unit apartment complexes, force the appreciation through the rehab, write off all the CapEx and depreciation, and then do a refinance at year 2 and get all my money out of the deal. And now I got an infinite return and I can rinse and repeat. I'm like, this makes a lot more sense than single family. So I'm going to sell these single families, roll it all into multi. And that's how I got started there. But whether I'm an LP on the project or I'm on the GP side, raising the capital, doing what I'm good at, I am never going to operate. So of all the multifamilies I've been in 5 projects across the US, 5 different states. At the top, it was like 1,700 units. Some of them have been sold off. So we're down to like 1,000 or 1,100 right now. But every single one of those I've never been to, never once visited the property.
Yeah, I mean, that's the way to do it. And that's kind of how I'm building my business. I do a lot of fix and flip new builds and quick returning stuff to just create active income for like that side of my business. And my goal is to never see a property. It's just to sit at the computer, underwrite stuff, and then have teams just go do everything. So I can just focus on finding deals and that's it. And people with today's technology, it's very doable, right? It's not like it's impossible. It's actually relatively easy. You just got to build the system. And a lot of real estate investors don't understand that. They feel like they have to go look at it, touch it, which yes, you should have somebody do it, but you don't have to, right? You can always have someone else go there and be like, hey, this foundation is absolutely screwed. Like you probably shouldn't buy this. And you say, okay, on to the next deal. But you didn't have to physically go there, which is great.
Yeah.
So when you buy those properties, do those deals, I'm assuming you just put together a team of property managers and like acquisition managers and basically maintenance team and stuff like that, and they handle everything. And then you even probably have an operations manager as you kind of just focus on capital raising and finance portion of it. Is that where you're the best at?
Yeah. To me, the most important thing is the person at the top managing all the people that are managing every little piece of that business underneath, really making an investment in a person and their ability to execute the management strategy down the whole stack. It's interesting because like when we talk, like, is it just more commas, like a single family versus a multifamily, it gets even more stretched. Like on the high end, it gets even easier. Like the project we're doing in Chattanooga, it's 120 acres of development. So we're talking a subdivision, hotel, multifamily apartments, an entire downtown, mixed use, right? So when you get to that level, when we're talking $1 billion plus projects, the city and the state become your partners. So in that project, we got over $100 million of TIF financing from the state of Tennessee. Now the taxpayers are literally funding the project, and it's a whole nother level of stability when you get to that level. It's almost like the too big to fail projects. Obviously, any project can fail, but there is a level where you become completely insulated when you have the city and the state on your side and you're intertwined like that. So that's what I mean by leveraging relationships and partners. I'm involved in a project, like got some of the biggest billionaire money in Tennessee behind it, partners I can't tell you who they are, stuff like that. I mean, these are the best projects you'll ever get to be a part of.
Yeah, exactly. It's like it's just such a big impact on like the city that the city and the state almost have to get involved, and then they want the project to be successful. So they're going to help back you, make sure that stuff moves forward. Yeah, there's red tape around stuff and they'll probably be a pain in the butt in some areas, but you just deal with it and you're a partnership with them to get it done and make the area better. And then also with projects that big, you just have such a large variety of like type of buildings or projects within the project, right? Like you're saying that there's some multifamily, there's some single family, there's apartment complexes, there's commercial, probably like industrial stuff. So it allows you to almost play more chess with that, because say if like one portion of it is not doing that well, then you can have other options within the project to expand the capital coming in to help like relieve that, or you can even get rid of that, or like sell that off to then help support other parts of it. And it becomes just chess almost. rather than like if you're just focusing on like one single family and all you got going on is like one fix and flip, that's all you got. So like you got to figure it out, and you have a very narrow right and wrong of what you can do there. With the big projects, you can get really versatile with it, which is, yeah, it gets really fun. And people wonder why like Donald Trump and stuff like did really well in New York. It's because he got too big to almost fail like that, where the city was like backing him on a lot of his projects. So it gets tough. It's different kind of tough because you start getting in like government red tape and state red tape stuff, but it does get a lot more fun just from looking at it and hearing about it as well. I haven't been a part of a project like that, but I can envision it, and it's probably awesome.
There's extra layers of leverage, right? So most people are like, if you buy a B-class apartment value add, you're like at end of the supply chain of where money was made the whole way, right? So if we're buying the dirt and developing it, and then we can exit pieces of that property to, let's say, Toll Brothers that wants to do a subdivision, that's one layer, right? And then Toll is going to make a ton of money off of their layer. So you have the option to say, okay, we've got 120 acres here. You know, there's tons of things we can sell if we want to, but then as we sell and things get developed, the value of the land keeps going up. Mm-hmm. So we also have the option to say, okay, we're putting a hotel here. Instead of selling the land to a hotel developer, why don't we partner with the hotel developer and we'll raise more money into the ground up, right? So you can bite the apple so many times when you start with the horizontal land.
Yeah. And it's just so much you can do in like those type of situations. And there's a book that I read, I can't remember the freaking name of it. They just dove totally into commercial projects and basically entitling land contingent upon, basically buying land contingent upon entitling to then like sell to like larger corporations. So like you can get really creative with it. You can buy like a huge plot of like 100 acres or something, right? And then you can entitle it with the state and the city to be able to put like an industrial complex there, like retail stores or whatever. And then you can get it entitled to the point that you can build that, and then you can just sell it to Amazon for like a couple $1 million because they're going to take it and then build that, distribution center or something like that. So you can you basically take land, buy it for like $200,000, get on a contract for $200,000. You don't have to buy it. And then you just make it contingent upon entitling. And then you basically do the work to entitle it, which is probably like another 25, 50 grand, which is risky. Yeah, it is. But then you can sell it to Amazon or something for like 3 mil. And then you just pay the original seller like 2 mil, 200,000, take the profit. It's just like, you get so creative with it. It's amazing in those bigger projects. So I'm sure you see that and deal with that all the time. And that's where it gets fun, because it's like playing chess, and you just have to understand the best use of that project or the land and basically tee it up for the next person to come in and buy it from you. And then you take those profits and do it again somewhere else, because the domino effect is fun. But cool. Let's try to bring it back a little bit, because this is super down the line. It's like, it takes a while to get to where you're at, right? And it takes a lot of effort and a lot of grinding and then just learning and just experience partnerships. So when you're talking to someone that's like new and just wants to get into any type of investing, even if it's real estate, even if it's private equity or anything like that, like what's like a good mindset, or like how you would tell yourself when you were getting started, just some ideas or goals or advice of what you would do?
Yeah, I struggle with this a lot, because my answer is going to be from my perspective now, but I do think this is important, where your barometer of when I should start investing is going to be the level you can play at. So in the beginning, when you first start making money for the first time and you've got $5,000 in your bank account, it's like, oh my God, I'm ready to buy. And then you open up a Fidelity account, you put $500 in the S&P 500, maybe you put 500 into some stocks you like, and then you sit there all day watching the portfolio move $20 one direction or the other. And what you're doing is you're conditioning your mind to focus on $20 instead of the thing that brought you the $5,000 to begin with. So I think that in the beginning, don't try to be an investor until you are earning serious amounts of money. So the way I would gauge that is, at a bare minimum, if you want to be a private placement investor, you need to be accredited anyways, the accredited investor stuff, right? So if you're single, you got to have a 200,000 income gross. If you're married, it's 300,000, or you could be qualified by net worth, which is $1 million excluding your primary residence. So in my mind, you shouldn't even think about investing in anything other than your main thing, your mindset, your proximity to players. Like, I would be investing in events, in skills, seminars, or leads, or whatever's going to get your income up to where you can actually save enough capital to even get started in this world. Because the minimums, if you're going to be an LP investor with any decent fund in 506C, I mean, the minimums are usually 100,000. So, and to put 100,000 into one deal, like from a responsible diversification thing, you should have at least 500,000, right? So, I mean, really, it's like, you've got to invest in your skill sets and figure out how you're going to earn money before you should go out and try to put your money to work.
Yeah, I agree with you completely too. And I think part of the issue is, and I always come back to it, a lot of it is social media, because everybody's always saying, saying like, hey, passive income, like invest early, invest young, invest like in your 20s, invest in your 30s. But it's like you can't invest until you actually have enough money to really capitalize on investing, and you shouldn't, because the fastest way to make the most money at a young age is to really just invest in yourself and get really good at a skill set that can create active income for you. And then once you get that income to a certain level, like you said, then you can start thinking about putting your money to work for you as you're still working on your active income. And then eventually, once you keep putting money into those investments as like an LP or whatever, that money will be making more money than you're making in your active income. And that's when you kind of make the switch over. And you can be like, okay, now let's just look at investing, right? But it takes a while. And I think part of the problem with society today is a lot of, one, nobody's patient anymore. Everybody's like, I want it now. And if I don't have it now, then I'm already bored and I'm to change and do something else. And two, it's like, there's a lot of just like fake kind of gurus out there and stuff that are just promoting stuff that is nonsense. And it's just nonsensible. And if you look at the history of like investing too, like even like Warren Buffett or whatever, it takes a while to like get really wealthy. And all he really did was invest. I don't know what he really did for active income. He was just, I think he was still like a fund manager or something. I forget, but he took a while to get to where he was, right? It was like, he started investing, he was like freaking 14 or 13. And then I don't think he got his first like million until he was like way, like later on, like maybe 30. And then all of a sudden when he was like 50 or something, that's when he started getting the billions or whatever. That's a long time. I don't know if that's the right time frame, but it was a long time. And
it's pretty on point. Like he made 90% of his wealth after like 80 years old. It's like,
yeah. And it's like, there's a reason, because then you have so much money that you're investing that it's just accruing, right? But you can't get that money in there to make it a huge difference if you don't have any active income coming in. Like if you're putting $500 in a stock market and you're hoping that's going to make you $1 million, like it's not going to. Maybe in 50 years, no, it's not going to. That'd be insane. That would be an insane investment. $500 to make you $1 million in 50 years. That'd still be pretty good, but it's probably not going to happen. But I love that. I love that because everybody's trying to look for like a way not to work, and investing seems like the best way to do it, but you just can't do it without like a good amount
it's like
of money.
Every crypto person that goes up, everybody's a genius, and then you never hear from them when the market turns. It's like, and that's fine. Like I think everybody needs that learning lesson. Like I actually have totally changed my mind on how I look at this, because I took a brutal loss, almost half my net worth on one fund, and it was the hardest thing I've ever gone through. But on the other side of it, I'm so desensitized to that amount of money, right? So actually, the faster you can fail, the harder you can fail on the way up, qualifies you to play at the next level. So I think a lot of us are trying to protect money, right? I did that for 10 years. I would only take very conservative shots. And in 10 years, I only had like $1 million to show for it, which I know that's great for a lot of people, but that's not where my dreams were. That's where I deserved to be based off the risk I was willing to take. Then I started taking bigger risks. We built a $20 million company in 1 year. It took me 10 years to build a $10 million company because I was being too conservative. So I would rather go that 20 million route, lose it all, learn a ton, and go do it again, because that's actually how you end up winning in this game. If you try to avoid losing, you'll never win.
Yeah, it's like people are too afraid to lose when it's not a loss, just a learning experience. And then you take that and just do better the next time. And you're not going to be perfect. You're not going to get a home run like right away. And if you do, congrats. But most of the time people fail falling forward, like you said, and you keep failing until all of a sudden something works. And again, that goes back to like social media, making people seem like they're overnight success. Like, oh, it finally worked. But like they were working on that stuff for like 5 years, 4 years. And finally it worked out after they failed numerous times. But yeah, like with that mindset, switching from having conservative type investment mind, right? Like making $1 million in 10 years, which is very good. But then turning that around to like build a $20 million company within a year. Like what was the shift that you made? And did you forcefully make it? Or did you start like reading like certain books? Did you start trying to ingest more like of that type of mindset through like podcasts and stuff like that? Like how did you kind of train your mind to get to that point and kind of switch?
It's interesting because I spent 10 years obsessively learning and not doing. Not that I was doing my business. Like we built a great business, but I was not growing in terms of better vehicle or taking it to the next level. We were growing slowly. We were comfortable. When you never made a lot of money and you start making a couple $100,000 a year out of your business, you get comfy.
Yeah.
And then what you have to risk to go to the next level is very difficult. So, and I don't regret it because it did give me the knowledge and skills to go do what I did after that. But what I realized the difference is I actually needed to stop doing that. Like you need to learn when you're trying to figure out the path. But once you see the path, it's a complete inversion. No more learning, just go at the target. And I had figured out the vehicle that could get me where I wanted to go. All I had to do is execute. And that's, I got tunnel vision on execution. And I think the difference is I just don't, like, people take off Saturdays and Sundays. It's like, you take a vacation every week. You haven't even built shit yet. It's like I work around the clock. Like, that's what I did in the first business for 10 years. Didn't have a ton to show for the effort. I knew I needed a better vehicle. So I found a better vehicle that had the potential, worked just as hard, and got 10 times the results 10 times faster. So the vehicle you choose is one of the most important decisions you're ever going to make.
Yeah, it's a vehicle, then it's just mindset, and it's just, you touched on it, it's just execution. Like, you can learn as much as you can, but then you get stuck in paralysis analysis, and you just keep looking at stuff and saying like, oh, I should do that. Let me learn about that. Oh, I should do that. Let me learn about that. But most people that are successful, they know like a base idea of what they're doing, but then they just do it, and then they learn as they go, right? And like, that's what people are afraid of. Again, back to afraid of losing or failure. Like, the people that are so successful failed and lost a lot, but they just did it. They took action. And that's where you become the most successful, is by doing it, right? Now, when you first started building your, like, switched from Heartland Foods into the next thing, like, were you like scared at all? Like, were you worried and like you just bashed through that and said like, screw that, let's just go? Did you get like a mentor? Did you get like certain people to have your back like on your way? Or was it kind of just, you just went? Like, how did you approach it?
I was terrified, absolutely terrified, but I went anyways. I mean, look, I had done one thing my whole life, right? And it's coming to an end, and you have all these thoughts in your head. Like, nobody's exempt from these thoughts. I was like, well, I got to go into a new business now. Can I do it again? Was I a one-trick pony? Like, was I just really good at that one thing? And now I'm going to struggle. Like, everybody has these thoughts. Like, it's not unique. Like, you're not special if you have these fears. Like, everybody that did it have the same fears. You're never going to be qualified to do something you haven't done. You're never going to know how to do something you haven't done. The difference is the people who leave anyways. It's like the first time I spoke on a stage in front of 5,000 people, I couldn't sleep the night before. I thought I was going to throw up and I'm shaking, but I still showed up and did it. And it went great. And then it's like, I think that's the difference, is just not cannibalizing yourself by how you feel and just relabeling how you talk to yourself. So now when I feel the fear coming in, I go, oh, there it is. There's that excitement you're looking for. Something new, right? It's like, is it fear? Is it excitement? Like, how you talk to yourself is the difference between everything. So yeah, terrified. I'm still terrified at the levels I'm going to, but that's what makes life exciting. Run towards the fear.
Yeah, it makes you feel alive. It's like when you feel scared or you feel like you have like imposter type syndrome, that's another one too. It just means that you are bringing yourself out of your comfort zone, which that's where you grow. You don't grow unless you're not comfortable. So like the second you start doing something, you're like, oh man, I don't know what the fuck I'm doing, or I don't know what the next thing is. Like, that's good. Keep going that way, because you're going to grow, you're going to learn, and you're probably going to be so thankful that you just pushed through it rather than sitting back in comfort where you're just going to stay in the same place, right? Like, you're not trying to get out of there or grow. So like, yeah, everybody's going to be afraid. You just got to do it.
It's also income mindset, right? Like, I think like everybody probably has the imposter syndrome with your income. I mean, like, who am I to make $100,000 a year? Like, and then it happens and it's like, oh, well, who am I to make $250,000? Do I deserve to make $500,000? And then it's like, wow, like, who am I to make $1 million a year, right? And then I got my new partners that are like, you only make $1 million a year? We got to fix that, right? It's like, it's just like, you can have whatever you want, but you have to believe it's possible for you and that you're going to be an outlier. You're going to be the exception to all the rules. And as long as you believe that and you keep going, like, you can't, there's no guarantees. This is also why I don't set long-term goals anymore. Like, I have dreams, but like putting a target and a timeline on a result is insane. You can't control it. So all it's going to do is give you stress and anxiety. So I'm the opposite of this goal setting stuff. I'm like, no. Like, we got big dreams because your potential ends at the distance you can dream, but I'm not going to focus on that on a daily basis. I can only control my next 24 hours.
No, I like that a lot. I love that. Yeah, I do like a power list where I write down like 5 tasks every single day and I just focus on those tasks. And they're towards like my main goal. And I used to write down, like, I still kind of do. I do like a 3-year, 5-year, 10-year plan, but I put like on those plans and I just know that it's just to keep track. Like, it's not gonna, like, the timeline changes all the time, right? And things shift. But as long as you're like going towards that direction and taking the right steps towards your big goals, like, they will happen as long as you take the day-to-day steps. But yeah, always, I like that like writing them down and like putting a date on it. Like, you can't control freaking that. Like, you can only control what you do each day. And if it aligns and if it gets there, awesome, in that time frame. But you could get there faster or you can get there slower. Either way, it's not like a loss. It's just things align like a different way than you thought. But as long as you just keep stepping forward. Because if you focus
focused on a target, you're going to totally miss the process.
Yeah.
Right. And this is also the dynamic of like when we sold the business and I had done like all these great things, it was like I was miserable the whole time on the way to the target. You hit it, you're happy for 5 minutes and it's, oh shit, I need a new target. Like, so, and then you kind of zoom out and you look at this thing we call life, and you're only going to look back on your life and say it was a great life if you enjoyed every single day just because you got another day. So how do I do that? Same thing as you. Powerless. What's got to get done today? As long as I take care of the inputs, what I can control, I can live with whatever the outcomes are going to be because I have no control.
Love that. No, I love that a lot. So we've been on here for about 45 minutes. I want to start wrapping this up for you because I know you're busy. I do like to finish out with just 2 quick questions or giving you the floor. But I always like to ask, I don't know if you read a lot or you listen to podcasts a lot. I'm sure you do. But what is like some of your favorite business investing or even like real estate books or even like self-help books that you would recommend to someone that just needs like a mindset shift or something to start thinking just out of the box a little bit compared to what they do today? Yeah, just share that.
Yeah. But the average avatar, someone who invests in coaching and programs, like we're talking like people who sell from the stage, the average income that buys that is $75,000 a year. So if you're someone that's not making $100,000 a year or more, 2 books, Brian Tracy's No Excuses, greatest thing that ever shifted my life by far. That's going to be #1 book for anything. And then #2 is Matt Monero's You Need More Money, because you do. And you don't want to find out the hard way when someone you love has cancer or something, a massive problem that you could solve with money, and then you can't do it because you didn't prioritize.
No, so that's very truthful. Yeah, like I think a lot of today too, like people kind of try to tell themselves, fine where I am, like I don't need more money. I think everybody in life needs more money because you never really know what's going to happen in like your life, and money does, unfortunately, it solves problems. So, the more that you can get, the better, the less stressful you'll be, the more opportunity you'll have, and it'll just be better for your family. But I don't know, there's like a weird, I've been seeing it with some, like, again, on social media. I don't like social media that much, but I have to use it for businesses and stuff. But
yes,
you see people talking about like, I'm fine, like I want to buy this van and just travel the world and not make any money. And it's like, okay, awesome, but you do you. But also, like, what if something happened? Like, you'd be absolutely screwed, and all of a sudden your family's in shambles and things like that. It's just, I don't know. And they try to take like a higher moral route for it, because they say like, if you want money, if you want more money, then you're selling your soul to the devil or something like that, right? And they try to take like a superior type moral status on money, which is just weird. It's just weird to me. And it's okay to want more money. It's right to want more money. Everybody wants money. It makes life better, easier, less stressful, and it gives you more freedom. And that's what everybody wants, more freedom. So yeah.
Yeah, I think anybody
that's my ramble on that. I don't know why that popped in my head, but
no, it's huge, because anybody that says those types of things quit on their dreams a long time ago. That's all it is.
Yeah. And they're trying to find a reason, to make them feel okay that they quit on their dream. That's what I was trying to say.
Yeah, it's easy to justify anything. I can justify doing nothing today. I can justify working really hard today. That's the dynamic that you're going to have in life, is you can always justify a decision one way or another.
Yep.
So how you talk to yourself is everything.
Exactly. All right. So I just want to end this with giving you the floor just to tell the audience how they can reach out to you or see what you're doing. So like your social media handles, if you have any like meetups or charity events or business links, just like where to find and contact you or learn more about you. This is where you can share it.
Yeah, I think Instagram's probably the place to get me, just because that's the #1 platform I focus on. But I'm on all the social medias. With a name like mine, there's only one in the world. So it's at Justin Freishtat. Last name's Freishtat. But yeah, we've got some exciting stuff. If you're an accredited investor, would love to get you into our portal so you can see the deals. Even if you're not accredited, you can still get in the portal so you can check out what private placement looks like, debt funds versus equity options, customizable funds. And yeah, feel free to hop on my calendar. I try to spend a third of my time with people ahead of me in the game, a third of my time with people on my level, and then a third of my time where I can get back and help pull people up. So I think one of the things that I didn't do early is I felt complex to reach out to people that were ahead of me in the food chain. So if that's you, just understand that everybody ahead of you wants to help you. And that's something that's really changed my life, is hanging out with people worth hundreds of millions of dollars, billionaires. They're they're all the greatest people and all they want is the best for you. So don't be complex and ruin your potential at success over how you feel and that negative self-talk.
Love that. Well, thank you for coming on, Justin, and everybody else. Thank you for listening. I'm going to put all the information he said in the bio as well, so you can reach out to Justin and have an easy way to click to Instagram and message him. But yeah, I appreciate you for coming on, Justin, and it was awesome getting to know you, and I'm excited to follow you more in what you do.
Absolutely. Thanks for having me.
Sweet. Thanks for listening, guys.